Welcome to Momentum Monday. Today is April 17, 2022. Happy Easter, happy Passover, Howard. What's going on?
Hey, buddy. I am in bike riding with some friends in Mallorca for the next week. So,
Sounds good.
working around my schedule. I just had a long day of flying.
How many calories do you have to consume for those long rides?
Yeah, it's more like you eat what you want. You're supposed to eat a lot. This isn't as crazy a ride as we did in the Dolomites, but you can eat 4,000 calories. I mean, you're burning 2 to 3,000 calories
Mhm.
a day. So it's not like you got to constantly eat just so you don't bonk. So let's get to it. What you're in San Diego?
I'm in San Diego. The weather is amazing here. So the big question for last week before we go to the general market is obviously Twitter. Do you own any Twitter shares at this
I
point?
bought, I bought a few just to stay engaged. I sold some 40 puts in the sell-off here. Just, I mean, if he pulls away, I just don't think you can pull away from Twitter once you're in it. He's not a trader, so I think there'll be other bidders. Um, People aren't taking him that seriously for whatever reason. This is a whole new kind of activism, but the even Galloway had gotten a group together from what to do an SPV. So I think I think there's someone's going to make a move. But how much premium? I don't know. It's not like the best. It's not. It's not. It's never going to be worth $100 billion as a business. So it's really it's like owning a sports team. Like what's it worth to somebody else eventually?
So some people are saying that this bid for Twitter kind of reminds them of Microsoft's bids for Yahoo in 2008 when Microsoft offered about 45 billion and the Yahoo board said no. 10 years later, it was sold to Verizon for 10 times less.
Yeah, I think Twitter has to be careful, especially as poorly run as it is. There's no competitor on the horizon for as diverse a group like us use it, and athletes and experts in their field. So, but there's nothing lasts forever, and Jack wants to make it all about the blockchain. I don't think that'll be a tough conversion. I don't know. Listen, it's been a fascinating story. It continues to be. It's really fascinating to see story, but it really has not. It's a no man's land, and too much drama. So what is working? Walk through what.
Okay,
Walk through.
so I mean, basically the same trends continue. Interest rates continue to go up. Here we're looking at the chart of TOT, which is a 20-year treasury bond ETF. As you can see, just keep making new lows, which means interest rates are making new highs, which is having a big impact on the valuation of growth stocks and especially tech stocks. Nasdaq 100 is looking pretty heavy here.
Yep.
It bounced to its 200-day. It was rejected. Now it's falling again. I mean, that level here, 340s, is an important technical level. And if people think that it's not possible to test those lows from March, all I can do is just show you the chart of SMH, which is a semiconductor ETF. It's already there and basically threatening to make new lows. So there is some selling going on in the tech, pretty significant selling in the tech sector. Software is going a little bit better after the.
Well, the thing is, Apple hides it. So if you pull up the S&P, if you pull up the S&P though, and you had told me 6 months ago that mortgage rates would be at 5%, and that inflation would be at 8.5%, and said the S&P, and someone said, gave you a poll and said the S&P will be down 10, 20, or 30%, and I think no one would have picked down 4%. So
it's down 9. It's not 4. 9%.
Is it down 9 off its all-time high?
Yeah.
So I definitely would have picked more than 10. So overall, considering rates are at their highest since, I don't know, decades, or inflation's highest it's been in decades, and mortgage rates are back to 2011. And considering the prices of homes, we've been talking about it for months, saying people be defensive, but there is stuff working, and just walk people through what is
Yeah,
working.
what's working is basically anything basic materials, oil and gas, uranium and coal, and any metals. As you can see, XLE here setting up near 3-year high, I think. Yeah, basically 3-year high, setting up for a potential breakout. Like most oil stocks kind of look similar. They move together as a group. Last week was big week for coal for whatever reason. Pretty significant breakouts in coal as
we were talking about that. I'm bummed at myself.
Alternative to gas, to natural gas, especially for Europe, which is so dependent on Russian gas. And yeah, I mean, this is energies where all the price momentum has been for the past couple of weeks, and obviously year to
agriculture too. Agriculture as well.
Obviously, yeah, agriculture, anything related to food, has been strong, but in the past couple of weeks, it's been mostly energy. Metal stocks are also holding very strong. XME made new all-time highs last week, following through this week. A lot of strength in the sector. The dips just keep getting bought in all of those metals like aluminum and steel. And
steel breaking out.
The gold also is back above that important level, 40. So it basically broke out last week. So let's see if we can follow through.
I mean, these things can double. That's how fast they can move.
Yeah,
it's not a huge supply.
It's completely possible. We just entered the new earnings season. That will be interesting to see how some of the tech companies have done. Obviously, I mean, the odds are good that some have done a lot better than others. So maybe we'll see some bifurcation in the tech sector.
Yeah.
And that's why I'm thinking that it's more likely to see like range bound choppiness in the Nasdaq 100 than a sustained selling, but who knows? We'll see.
Yeah, I mean, these are not again, like the question is, if we turn, what turns? Does Apple turn? Because there's so much damage in the average tech stock that's hidden by Apple and Amazon and Google, but Nvidia is even rolling over.
Yeah, AMD is even looking worse. I mean, they broke down last week below that 100 level. So in general, semis are looking
just back to 2020 pricing. So again, it's not devastating. It's just time, and the rotation. I think I said it last week. Like, well, we should be thrilled that there is rotation, at least within the market, not complete rotation out of the market.
Yeah, completely. Yeah.
At some point, we're going to see that, though. I just feel it. But I hope I'm wrong. A lot of times, I just hope I'm wrong, and I'll miss the first 10% up move. But I want to see some basing, and I want to see.
Yeah.
But with interest rates at 5%, Zoom and Cloudflare and all this DigitalOcean and all the stocks you like they're not worth as much in the rising interest rate world. And it's basic macroeconomic stuff. Everybody had 0% plugged into their formulas for net present value, and a jump to 2-3% is a huge move.
Yeah, I mean, the 10-year is almost at 3%. Less than 2 years ago, it was at 0.5%. So that's a pretty significant.
And everybody was like, everybody was convinced things would go negative. No, I don't even know what that meant. I remember talking about it at the time. But again, this is rates go to 7-8%. There's now competition. Like mortgages go to 6-7-8%. I mean, I may get in the business of lending to friends that need a quick mortgage. If you can make 9%, to do quick loans to whether it's people in your network that want to get a mortgage, because that'll be the way it goes. The banks won't lend. So if you're in the tech industry, jobs are good. The tech companies are paying $500,000-$600,000 a year now to compensate for not being able to convince you for stock. So again, there's high paying jobs out there, and planes are full, people are traveling, restaurants are busy, people have money, and we can make fun of it, but people do have money on the edges. So it's just one of those environments where I don't think the multiples can be justified with the rates and inflation where they're at. So
Yeah,
I
yeah,
think patience,
you're
just be
correct.
patient.
Other than the basic material inflation trade, definitely you're seeing some relative strength in the travel services stocks. What was it? Delta Airlines, they came out last week, said, I mean, they have record bookings. They expect
They can charge whatever they want. I'm not even looking at
to be
prices.
profitable this quarter, despite record fuel prices. So definitely, and I also saw strength in Marriott, all the hotels, like breaking all-time highs. Hilton, Airbnb is kind of waking up. Also the car rental companies, Avis.
And what about Visa, MasterCard?
Hertz.
How about Visa?
Yeah, they're not doing as well. They're basically following the Nasdaq 100. So
Yeah.
no alpha there as of now.
Yeah, I'm just comfortably high cash on the sidelines and waiting for growth to. But I mean, I'll tell you what, interest rates feel like they still have room to go higher here.
Yeah, that's what's kind of perplexes me is that, you know, over the past couple of weeks or 3 weeks, we saw a rotation into utilities and consumer staples, you know, which yield 4 or 5%. But why would you need 4 or 5% in those sectors if you can get the same in bonds, in fixed income? It's just at some point you're right that they might be a switch, you know, from stocks into fixed income if things continue
that
in that
cash
direction.
is trash trade was everybody was talking about in 2021 was probably near the end of, you know, cash is never trash, and we've been making fun of bonds, I don't know, for 2-3 years now, but well, you start earning 6% on some bonds, it starts looking attractive in the high vol stock market. So
Yeah.
all right, well, have a great week. Have a great week. Yeah, and I can't force the issue. Have a great week, and we'll see everybody when I'm home.
Yep. See you next week.